Hello again and welcome. This is Robert Schein, Managing Director and Partner at Blanke Schein Wealth Management. Today is Thursday, October 7th of 2021, and let's go through some headlines we're paying attention to, markets are paying attention to, so you should be too. So let's get right to it. Thanks for watching. Markets are up big today. There was a midday reversal yesterday, and Wednesday's trading markets were off, obviously, for the last 3 or 4 weeks because of volatility is returning. We spoke about this months ago, and so we've positioned our client portfolios accordingly, and now we're taking advantage of some opportunities that come our way as we see fit. That being said, why did markets sort of reverse midday? Well, it appears that Washington, both the GOP as well as Democrats in the Senate, sort of came to a terms of agreement, a deal, which would be short-term to raise the debt ceiling. Again, Washington style, kick the can down the road, and we can readdress and deal with this in the next month or month and a half, if you will. That being said, markets heard that news, and they made their way into sort of higher valuations, and that seems to be continuing, along with additional economic news that's positive. So the 4-week moving average for initial jobless claims, that report came out today and it was lower than anticipated, which means less people are claiming unemployment. And that's really great. I mean, if you actually look at the jobs opening number, so it's called the JOLTS report in the United States, there are over 10 million job openings. And if you look at the unemployment rate, which is just above 5%, but it's trending lower, that's about 8 million plus or minus job sort of unemployment. People are looking for jobs out there in the economy. So you've got this great imbalance. Now, question is it geographic? Is it, what are all the sort of, where's the disconnect? But the reality is that the foundation, so economically speaking, a lot of corporations, every small business owner that we have as a client that I know that I'm speaking to, there is a help wanted sign. So if you can't find a job in this economy, you might have to sort of retool, go back to school and figure some things out, because this is one of the hottest economies we've seen in quite some time in terms of finding a job. In fact, most employers are fighting right now for just to get people, to come back to work or start working again, and just to keep up with the demand. I mean, I think about it, that's a demand side issue, which means consumers are out, and as we reopen, the Delta virus is fading, at least for the short term. The economy is moving forward. Those are all positive signs as we monitor this for our clients on a daily basis. Now, the final thing we want to discuss, obviously, we've seen some market volatility as of late, and sort of what you see is inside the index, you have different sectors. In this case today, I chose to discuss the tech sector. The tech sector has seen a sell-off as of late, simply because if interest rates rise, which we've seen interest rates rising, technology firms are hurt more than the average. So more than like a financial services company, more than like an insurance company. When interest rates rise, those companies go up in value because of their future earnings. That's the way they're priced. That's why you want to be diversified when you invest. That's why you want to be balanced. And there's always a way to sort of navigate through the volatility of the market. But the sector right now that we're speaking about is on the board here. And now let's get right to our discussion on this. Now, this is the S&P 500 technology sector, and it really just shows a percentage of decline of the technology sector sort of stock prices as a sector from its 52-week high. Now, keep in mind, this is a 2021 right now. We were just off a 52-week high. We've been bouncing up and down. We hit it earlier this year. I know my graph hasn't really pointed that out, but it actually we are hitting 52-week highs consistently earlier in the year, and now we have seen what's noted is about a 5 to 10% sell-off on any respective technology stock within. Now, what's important to note is that on average, we see this range right here, which is the 5 to about a 25% sell-off from an all-time 52-week high in technology. And as you know, progressively in the last 10 years or so, we've seen several. And on this chart, you can't literally predict when it's going to happen. But what you do know is why we're invested for the long term in high-quality, well-run companies that could really navigate their way through it and thrive, is that as soon as they come down, not always, but more importantly, they do snap right back. But there is a healthy rotation is what we see within the marketplace, is what we're trying to point out, at least what the research is pointing, is that it's okay for a company or a sector to correct They all don't have to do it at one time, right? The S&P 500 is diversified in that sense. So if we're seeing underneath right now is each sector is sort of taking a turn, each company stock is taking a turn in terms of correction territory. We are right now in about a 5 to 10% correction territory. It wouldn't be uncommon to be right here, right in the middle, to a 15%. So we're, on average, majority of the sector is down 13%. We could see it go down a little bit more than that, maybe 15%. But that, keep in mind, that could happen real quick in a day, sort of a Friday to Monday, Tuesday sell-off, and then a rebound. We're already seeing a rebound right now, so it could have already happened. We don't know. But we're monitoring the situation very closely, taking advantage of opportunities that come our way. And this is just a history lesson for all of us looking at markets, saying, wait a minute, long-term view on the market. You could always find opportunities and always stay well positioned, but also have us at the helm taking advantage of that and paying attention. That being said, what are we concerned about on a go-forward basis over the next few months and quarters? Well, if you'd like to find out, please join us October 13th, 10 a.m. It's Pacific Standard Time. We're going to host our quarterly Market Outlook and Opportunities webinar. Again, it'll be a Zoom webinar. We encourage anybody to join. If you have that time, please put it on your calendar, October 13th, Wednesday, 10 a.m. Pacific Standard Time. So we hope to see you there, and we'll answer all those questions even more than what we just did today. What we're seeing, what we see opportunities for, sort of like the backdrop for tax law changes. We have, a couple of our team members right now are at a conference right now getting that real-time information from Washington as we speak. So that information is going to work its way into our webinar. So you're not going to want to miss it. I appreciate you watching today. Take care and have a great day.